Cool.
Welcome, everyone. This is Timothy Nihill, aka the Translator. I am here with special guest and one of our analysts and our crypto analyst, Alex Krieger, and our research guy and all-around good guy, Alex Kamener. So for the sake of this conversation, we're just going to refer to both Alexes by their last name because unfortunately they both have the same first name and same initials. But the point of this one is we just want to have people understand what's going on in the digital assets and the cryptocurrency markets, talk about what we're seeing today, and maybe share a little insight on some thoughts on what you can do, should do, shouldn't do. As always, giving you the disclaimer that this is informational and educational only. This is not investment advice, and we are not to be held liable for any investment decisions you make off of that. Obviously, we don't know your personal finances, so please use this as education. If you need more help, reach out to us, give us a call. We're happy to help. So with that said, what is today? Today is June 17th.
Yep.
Right, Friday the 17th. 2022, there is a ton of stuff going on, and we will be doing a massive amount of recordings on urgent topics for anyone that's listening and watching. These are very interesting times. And so obviously in the crypto markets, we've seen price decline across the board. And, you know, Krieger, you're pretty much in touch and in tune with everything that's going on. I mean, what are you seeing, and what are folks on the inside talking about?
Pretty much all the dilemma of what happened over the past course of a month and a half of Celsius and other big hedge fund firms going down, and just figuring out who's holding the bag. And lending is going, a lot of lenders are going under apparently too. Just really trying to figure out who's associated with what and who's holding the bag of the wrongdoing.
Is it like liability, or they're just over leveraged?
Over leveraged, and then say, I was reading an article saying that 3AC, so Three Arrows Capital, was pretty much daisy chaining, all over leveraging themselves. Not high leverage, but 2 to 3 times what they had, and accumulated a couple billion and at the top, and now it's pretty much, they invested in Luna and Terra, the USDT problem, and they anchor and locking their ETH for ETH 2.0, and then having a huge 70% decrease in their ETH not being liquidable when they need to do margin calls.
Sucks to be a leveraged hedge fund right now.
Yep. I would agree.
It's kind of funny. Have you guys seen, I think the book is called The Smartest Men in the Room, Long-Term Capital Management. You ever hear of them?
No.
Oh, that's a good book. So back in the early 90s, you ever hear of the Black-Scholes model? It's like options pricing.
Nope.
Oh man, you guys are rookies. So in in the traditional finance, there's a pricing model that you have called Black-Scholes, right? And I think Scholes was one of the mathematicians that came up with it, who worked at Long-Term Capital Management. And basically they were an over leveraged firm. I can't remember the specifics on it. I think their leverage was like 35x, and they went under. Well, they didn't go under, right? So they did go under, but because it was so bad, it was going to collapse the entire world economy, because it was so huge that they eventually, Fed, whoever had to come in and bail them out. But it was alarming. So some of this sounds like a little bit of that, but at the same time, and this just isn't right. It's not just at the crypto space. We're watching hedge funds go under across the board and around the world, right?
Correct. It's not only crypto. It's happening. Look at the real estate Evergrande scandal a couple months ago. It's not only in crypto. There's other firms. And wasn't there one in the 98 that happened too? A big firm was using lots of leverage that went under.
Right,
It caused a lot of problems too. I forget the name of it. I'll look it up actually.
right. So we recently, and I'm gonna ask this question and trigger bounce this off you a little bit, see what you're hearing and see if it connects. I have a friend of mine in technology who said, technology is kind of like a hockey stick almost, where it starts and you have this initial ramp up of firms first getting into this, whatever this offering is. It could be the internet, right? And then all of a sudden you go through a massive consolidation, and then the thing just takes off. Now, given the proposed regulations in the United States for digital assets and cryptocurrencies, are we kind of watching the same thing where essentially in reading it looks like it'll probably wipe out like half of DeFi, but you're then going to have all the dollars and the focus going to, coins like Ethereum, Matic, and all those folks, and then you're just going to see the adoption curve take off.
Yes. Think of it like the dot-com boom in a sense, right? You had pets.com and other big ones that were big in the 2000s that you didn't think weren't going to make it out of the whole dot-com boom. Like you said, it's a consolidation of all the big ones, and you're going to have probably 5 to 10 that'll be left standing.
Wow.
Yeah, well, okay. I mean in DeFi, right? I mean protocol wise. So you'll have Curve, Aave, Maker, you'll have Compound, you'll have the big 5 to 10 big what is the word? Big
That's all right.
protocols.
Right.
Sorry, I wasn't thinking the word. Big protocols that will stand out and succeed out of and rise from the ashes in a sense. But it's going to probably take some time to figure out, like I said, who's holding the bag of all this, the dilemma and the problems and the problem coins of Luna and the Anchor dilemma and all these hedge funds being over leveraged and finding out and seeing if they're going to liquidate them and so forth.
Wow. So if you're looking at everyone wants to jump in on pricing, right? Which is kind of funny. I think maybe we'll just stick with like BTC and ETH, like Bitcoin and Ethereum right now. It's kind of funny. I was talking with someone yesterday who basically said, we know the number for Bitcoin, pick a time frame, whatever, is going to be 200,000 and then probably 1 million, right? Whatever time frame. So we're watching this and knowing, hey, you know what? This is a potential, obviously, buying opportunity, because we're just watching at this point it being oversold. Same with Ethereum. Ethereum has a big merge coming up, right?
Yep. August should be.
August, right? So everyone gets, I think, way too caught up in the price of it, right? I just look at the space and say, hey, it's like getting in early on the internet and let it go do what it's going to do. But for folks out there that are maybe curious, what are we thinking? What are you hearing in terms of bottom prices for BTC and Ethereum, and what's going to be the reaction and recovery to it?
So start with Ether. I would say from here you could see probably another going right now. We are at 2017 highs of what Ether did in 2017. Where if that support falls, we're probably going to be going down another 20 to 30% back down to 800 is the next support. And if that breaks, then it's 400 to 200 in that area, going to be bouncing, and it's going to be a quick up. It ain't going to be accumulation down there for very long. It's going to be kind of like a V-shape recovery.
So you're just saying it's going to go bang.
Yep, it's going to fall and then instantly shoot back up once it hits that.
Right. So you basically, you can't really time that.
Nope, you gotta just put your orders in and sit and wait. Yeah, there's no, and to be honest, I would rather shoot for 400 than 200. Like 200's pushing it, and I'm not saying it can't hit that, but I'd rather buy at 400 and not miss it thinking it's gonna go to 200.
Right.
A few extra $100 ain't gonna make a difference.
Interesting. And then what are you hearing on the Bitcoin side? What are people talking about with BTC? I mean,
Oh.
in our land, everyone's like, well, it's not proving itself as a store of value. And I said, well, just wait a couple months, you'll see why.
Well, yeah, I would. It was made in 2008 when the Great Recession happened. So to me, it is the proof of what should help the recession and recession proof, right? Just because it dropped 70%. Look at the stocks and just wait a couple months. Like you said, I bet you it'll outperform the stocks in any bond that's going to be coming out or that they have.
Bonds are dead, right? Like everyone talked about, oh, the Fed raised rates. So the Federal Reserve of the United States raised rates by 75 basis points, right? Or 0.75%. During that same time frame this past week, inflation went up 3%. So your rate yield just went negative another 2.25%. And if you're doing your homework, and we're going to have a video on this that we're recording next week, and we'll have our friend Chris Galizio on, because he's just, one, entertaining, and two, he's just, I think, really, really in tune with a lot of this stuff. But if you're looking and watching what's going on with Russia, China, the Bank of Japan, and the news, like over the past week, I mean, I've been in finance almost my entire life, right? Like I started tracking the market when I was like 6 or 7 years old. And I tell people it's funny because in the Buffalo News, you only got the business section every other day. Right? It wasn't a daily thing. I remember tracking Geico because it was always in capital letters. Memory serves me correct, and I had a couple others, but I looked at it, and I mean, I can't for the life of me ever remember, and this isn't just reading stuff, this is talking with people and other people around the world and country that are talking. I mean, I have people calling another 40%, 45% drop on the S&P 500 that may happen in the next 60 days.
So that put us in August, right?
And we have a couple new clients that we are onboarding and starting to work on their planning with. And we always get people's risk tolerance, and they're not risky people, but their 401ks are 100% in equity.
It's risky.
Holy cow, like this is a problem. So it's some of the stuff we're seeing is just crazy. But yeah, I mean, we have a lot of stuff that we're going to be recording talking about this stuff. So obviously I'm, getting a little bit ahead of ourselves, but I mean, I've never seen this before ever. And I have people that have been in this industry and in finance for a long, long time that are saying it's unprecedented, man.
Yep. Yes, sir. Only looks like it's getting worse too, being escalated.
Right. It's like Rich Dad Poor Dad said, if he'll give him a plug, why not? I've seen some of his stuff. He's been screaming gold, silver, and Bitcoin, baby.
Yep.
Alex, you never actually said what you thought the Bitcoin low price would be. I think personally, stuff that I've heard is it's going to be around 1,400.
1,400.
I don't know how you feel about that.
1400.
Sorry, 14,000. My bad. Misspoke.
14,000. I've heard 12, but 14 works. Celsius's liquidation for BTC is, I think, around 13 or 14,000 too.
Hey, I have a question for you, and just for people who are watching the video, can you explain exactly who Celsius is and what they do?
So they're like an exchange, I guess, right, Alec Camner? Like we went to their party. They seemed like I've used their app. Like I don't know. I had no funds on them. I never I've only downloaded their app because we went to a party at the conference when we went, and I think they're like a platform, like an exchange, but they were like how with our accounts on Gemini, we get a percentage, right? I think they were doing the same thing, but they were taking customers' funds and using it kind of uh, like I think other exchanges do, but on more riskier side, right? Parse
Right?
of
Were they doing,
DeFi.
so they were doing security lending and on risky assets.
Correct. Yeah, is
And
what I
then
think it was.
and for anyone's listening, security lending is something that happens across every organization across the entire world. So like, for example, I worked in ETFs for a long time and was at the time of an acquisition, and everyone's like, well, why is this firm buying passive investing? Because it's not high margin business, but it's not for that business. You're looking at security lending, right? And if you don't understand what security lending is, then you should do homework on it. Because when these big firms have your assets, they're lending out behind the scenes to generate extra profits, right? But no one talks about that. So it's not something that's just unique to the digital asset market, but it happens in all of finance.
Interesting.
Yeah. So interesting. So if we're kind of looking forward and not saying we're looking through a crystal ball, but Alex, what do you think we're going to see over the next couple months in the digital asset space, in the crypto space?
I think we're going to have a big weed out process of a lot of, I don't know. When I first started, we only had a couple hundred coins. Now in 2017, I think it was a couple thousand. And now we're, I think, up to 19 or hold on, 13, almost 15,000 different coins, 470. Like, that's way too many. So it'll be a weed out process. I think you'll see a lot of coins get weeded out, and the ones that succeed will be rise to the top. And that's what just need to pick the winners.
Right. Cream of the crop, I rise to the top.
Yeah, pretty much.
That's awesome. So, well, anyways, I just wanted to thank you guys for coming online and for recording this, and for anyone out there, we just wanted to give you a short little brief update of what we're seeing. So obviously a lot going on across the board in every economy. Digital assets are not, I would say, insulated from anything, but at the same point, I mean, it's just part of what the technology process is, right? You get innovation, consolidation to the major players, and then you just watch what the technology is going to do. And I think that's where, that's where blockchain and the power of Bitcoin and Ethereum and the other DeFis is just absolutely fantastic. And given what's going on in the markets, I think it's an out, right? It's another avenue to protect yourself from traditional finance, and what we're ultimately seeing is a massive change. So like we said, we're not here to give investment advice, but just give everyone out there an update. Thank everyone for their time. If you have any other questions, comments, please visit us at Twin Shores Capital or Twin Shores Wealth Management. Have a great day, and we look forward to seeing everyone soon.